Over the year, we've had good performance in stock selection, in particular, in consumer, with stocks like Adidas and Priceline have done very well, and in healthcare with United Health. So that's over the year. Over the shorter time, we've had better performance coming through from some of our UK stock selection and some industrials and materials. Well, we have moved more overseas as a result, so the UK is now around 30% of the whole. And we've also tightened up a little bit on some of the buy discipline. Overall, it's easier to manage as one portfolio. And so, going forward, we imagine less volatility in some of the UK stock selection. Well, the US election result is very significant. We do think that we are going to see the potential for deglobalization, which could have an inflationary impact. Also, the proposed increase in fiscal spending could have quite an inflationary impact as well when you're looking at US GDP, debt to GDP already at a high level. And on the proposed plans, it could go over 100%. These are factors which the bond market is now thinking about and pricing in. On the other hand, you can also have quite a benefit from fiscal reform, from lowering tax rates, and from bringing back some of the cash which is overseas. We've seen different parts of the portfolio performing in the last few weeks, and so some of the industrials and financial stocks have been leading the performance. The fact that the portfolio itself is very well balanced between the growth and the value styles means that overall the performance has kept positive, but we're just seeing different parts leading now. Well, I'm cautiously optimistic. There are some positives and some negatives going forward. The positive, the fact that economic momentum seems to be improving and the corporate earnings momentum is also slightly improving. That is helpful and would lead one to be more positive. On the more cautious side, the level of valuations where we are at the moment, particularly now against bond markets which have fallen, look more stretched, and also the fact that we are going to see some higher interest rates. Those are the two factors which would hold you back. So I think overall we're expecting moderate positive returns, but within that we think there's still plenty of opportunity to add value through stock selection.